Welcome back to the morning show here on Rise News. Nigeria has recorded growth at 3.98% in its gross domestic year-on-year YOY. It went up significantly to 4.23% in the second quarter of 2025 and is now reversing to 3.98% in Q3 25. With this development, economic growth has now officially been recorded as unstable in the past year. However, the Center for the Promotion of Private Enterprise has warned that the cost of living may rise despite Nigeria's GDP growth in the third quarter of 2025. Joining us on the show to discuss the latest GDP figures and the 2026-2028 medium-term expenditure framework is Ayo Teriba, an economist. Good morning, Mr. Terriba. You're most welcome to the morning show.
Good morning, Ayo. Thank you very much.
Dr. Terriba.
Good morning, Dr. Abati.
Yes, good to see you again.
Yes. Thank you very much. Morning, viewers. Yeah.
We've been told that GDP growth is now, about 3.98 year on year, and that in the third quarter we even did very well and all of that. But why this challenge? GDP growth every time. Nigerian Bureau of Statistics would tell us. But we don't see the effect in terms of cost of living in Nigeria. And then the Center for the Promotion of Private Enterprises, CPP, says, in fact, the cost of living may rise further. So when we hear GDP growth is, promising and all of that, ordinary people like us are excited. But what the economists tell us, we don't see it in terms of inflation figures, in terms of cost of living, in terms of interest rates. We don't see the effect. Can you explain it to us?
Okay, well, thank you very much for the opportunity. It's a pleasure to be here again. And I guess for our last three engagements, the most relevant for today's topic will be the one we did on the 24th of December, Christmas Eve, the day after the interview with the president. So I'll thought just to be a bit mindful of where we are coming from. That sense of direction is very important. And before I proceed any further, I would say welcome Dr. Abati to the 6th floor.
Very important.
Congratulations.
Thank you.
I come with 9 experience of 9 quarters on the 6th floor. 9 years. Okay. Now, GDP, I want to correct a couple of impressions. Let's refrain from comparing quarterly GDP growths. You have 4 quarters in the year. Economic opportunities are unequal across the 4 quarters. The weakest quarter should be the first quarter because it's the year after the end of year binge. And the strongest quarter usually should be the 4th. Then of the second and third quarters, the second quarter should be the strongest. So if we have a weak first quarter, economic activity picks up in the second quarter. By the time you get to the third quarter, people fly all around the world for the holidays, for the summer holidays. So you expect a bit of lull. So it really doesn't matter that the growth in Q2 was a bit above 4%, and the growth in Q3 is actually 4%. It's 3.98, just 0.02 less than 4. And that's the strongest Q3 growth also since 2021. The Q3 2021 is just 0.05. Higher than what we have now. So it's worth, and it's slightly better than what we had last year. So growth acceleration is occurring. It occurred for the first quarter, it occurred second quarter, it occurred the third quarter. So now you're looking for the impact in the lives of all of us. Then context is key. Where were we a year ago? We were being roasted by exchange rate volatility, by inflation that peaked this time last year at 34.6%. Exchange rate, at some point around this time last year, 1,900. So you are back now at less than 1.5 in exchange rate. Inflation is less than half of what it was a year ago, and growth is accelerating. Another 6 months in the trajectory that the economy has been in the last 9 months, and it should be approaching El Dorado. And the key question, therefore, is the economy has made gains this year. It's hard to deny, that everybody living in Nigeria has made some gains. You were exchanging Naira at 1,650 at the end of last year. You now do so at 1,450. You can do the numbers. So you gain $200. And you still complain that you are not feeling the recovery in your pocket. And inflation running at 34.6 is now running at 16%. That's less than half. So it's not as shocking as it's, that's relief. And if you give 6 months, perhaps we'll be below 10% in inflation, and that's fine. So basically, that will be then GDP growth. We've come through 5 years, pandemic, then the Russian-Ukraine war. We've only managed to see GDP growth acceleration in the last couple of years. The first 3 years, 4 years, 2020 to 2023, nightmare. So if you had sunk that deep when you come out of, when you just come out, right. You're happy you survived. So we've been coming out of recession. We are fresh in recovery. And you have to allow, it's like the baby bump that you see in the first trimester. You still have to wait for till time before the baby actually then arrives.
Since January. The same explanation. We wait.
Even from the time when the first reforms were made, when the president assumed office in 2023, he's often compared it to childbirth and asked for the patience of Nigerians. But I believe that patience is running thin. And I don't know whether you can give us a timeline, because people are looking for something to hold on to. We see these figures, and you're right, there is some form of economic activity based on some of the hard-hitting reforms. But what the Nigerian person wants to hear is, how would it impact on my pocket, and when will this happen? For how long more should I be patient? In addition to that, I'll just ask you to just touch on the MTF and projections around the GDP growth rate of 4.68% in 2026. Even though the president is pushing for a 7%, that's almost double of where we currently are. Is this realistic?
Okay. I'll suggest we approach the conversation in the following manner. First, let's count what's improving, and I'll help with that. Then let's identify what more needs to improve. And first, as to what's improving, we were discussing 42 billion reserves on the 24th of December last year. The president in his charter mentioned 42 billion in reserves, and we were puncturing it that it wasn't the gross reserves that mattered, it was the net, and as of that date, we didn't know what net was. That if net reserves could become adequate, the Naira would stabilize and inflation would come down. We said that much. Okay, now, around the first quarter, the CBN informed us that net reserves had been 23 billion. Around that date of the conversation, though we didn't know it. And last Friday, the Central Bank governor has come to update us again that it's now 29 billion. So don't worry about 46 billion in gross reserves.
India is quoting over 600 billion.
The ratio, it's a strong ratio.
What matters is that net reserves now stand at 29 billion. From 4 billion in 2023. And that's what lies behind the stability of the exchange rate and the deceleration of inflation and the recovery that we are now getting. Now, what more do we need to do in MTF? I feel that the economy has turned out better than what the government had projected that it will be about this time. Inflation, they say, will be 15% by December. In October, it was already at 16%. And if it continues in the trend that we've seen since December last year, it should be much better than 15%.
But with insecurity,
but
that's high.
government is once again now saying that the exchange rates next year will be 1,512.
So
suggesting it will be worse than it currently is.
I have to intercept because we have to round up the interview. I just want to include my question as you summarize everything. So my thoughts are this. I think it would be amiss for us to have this conversation without making reference to rebasing, which of course is one of the major differences between the numbers this year and the numbers last year. Now, given the context of rebasing and the increase in numbers that we saw based off of that, and the cooling off that we're now seeing from last quarter to this quarter, inflation is starting to meet the target that the government had placed. But what seems to be the missing link here is the interest rates. Because when you look at the breakdown of the economic activity, your industry, your manufacturing, the key sectors that are driven by that borrowing capacity are struggling at the moment. So my question to you, as you round up with all other questions, do you think that this GDP is going to be able to tick back upwards without an interest rate cut?
Well, there has been interest rate cut.
The last session we held?
The last two sessions. Mind you, the central bank chooses to do MPR plus corridor. And they've eased the corridor by 400 basis points in the last two meetings and only eased the MPR itself by 50. So they've done 500 basis points in easing between September and now, and that's a lot of easing. And they're doing it because of the progress made with stability of the exchange rate and inflation, and knowing at the back of their mind that reserves are adequate, net reserves. Rebasing happened, there have been two rebasings, inflation and GDP. The first one was announced, it took effect from January, but inflation started easing in December. We ended December 33 from 34.6 in November. And we've seen 10 months this year, except March, when it's told. The rebasing can only explain 1 month, that's January. It can't explain consecutive declines since then. Therefore, the driver of the deflation or the deceleration of inflation is the stability of the Naira and the strengthening of the Naira.
And GDP.
And both will add up for the acceleration we are seeing in the GDP. Going forward, what should we keep our eyes on? Make sure that net reserves gets even more adequate. If net reserves gets more adequate, you can get another year like 2025. And exchange rate might well end up at 1,000 to the dollar rather than 1,500 to the dollar. And the real element now that the budget, the people doing MTF needs to focus on, what's going to happen at the fiscal end? All of the story we are saying now is only happening at the monetary, forex and money.
Yeah.
What's going to happen at the fiscal end? What's going to happen to government revenue?
Yes.
It's easy to announce, I'm going to get 30-something trillion in government revenue, but end the year with only 10 trillion.
Dr. Terriba,
yes?
The theory is very nice. But I think the ordinary man, the ordinary Nigeria, when we hear this growth, we have not seen in the growth in our pockets. This is a concern. You are celebrating 29 billion reserves. India is talking about over 600 billion in terms of reserves.
India is a $4 trillion economy.
So we want to be and 1 trillion. When are we going to get there?
They started the way we are starting now.
2030 is the estimated time frame given by the president.
How old will you be in 2030?
$1 trillion economy.
You already
it's not going to happen. Yes, we've come from a very difficult place. We're making progress, but I believe that the question would be, how fast can we get there? So there are promises upon promises.
It's going to depend on the details of the budget.
All right.
We have a 5-year development plan that we don't know the details.
Okay.
We have an MTF. We just have the news break. We don't know the details of the MTF, of the budget, and of the plan.
Thank you so much,
and
Dr.
that's what's going to determine the outlook.
Thank you. Thank you very much, Dr. Ayo Teriba.
Dr. Terriba, the optimist.
Always
Forever
optimist.
an optimist.
And to be fair,
What you do,
we do need optimists in the mix of the reality, the grim realities of the economy. So thank you so much for always bringing that renewed hope to us here